Year-end tax planning starts right now, and that's why I am going to break down for you in this video an acronym that I use to do tax planning. I use M.E.R.N.A, M-E.R.N.A. That's how I've come up with a way to reduce my clients' tax bill so that they don't overpay Uncle Sam. I want business owners to keep their cash in their pocket, and I've come up with a strategy on how I do that step by step. The M in M.E.R.N.A stands for maximizing expenses. Here's the thing, people. You guys are all looking for tax write-offs, but you're looking for your write-offs in all the wrong places. Let me give you this analogy. If you were gonna cook a meal, you would go through your pantry and see what ingredients you already have before you go out buying other things. That's exactly the way you need to approach tax planning. You need to maximize the expenses that you currently have. What is it that you're doing that you can be taking as a write-off right now? Let's shop in our own expense cupboard. Let's get those expenses out and let's get them onto the tax return and reduce our tax bill. That's really important, and that is step one. The second letter in M.E.R.N.A is E, and it stands for entity structuring. What type of entity are you operating your business in? Are you a sole proprietor? Are you a single member LLC? Are you an S corporation? Do you need to add another entity on top of the structure you already have? These are the things that I am looking at. Why? Let's think about the wealthy people. When you Google companies, Amazon, GE, they own multiple companies for various things that they do. I am going to be looking at your entity structure to see, is it the best structure to reduce your tax bill, to keep it at the minimum level possible. The next thing that I am looking at is retirement planning. And you might be thinking, Carla, we're too young to be thinking about retirement. No, you're not. You need to start saving right now, because retirement dollars, really you want the benefit of time. And when you save a little bit every single day, where dollars are compounding on top of dollars and interest rates and it's growing, right? What's going to eventually happen is you're going to get that compounding effect where your money is going to grow. It doesn't take a lot. It just takes consistency over time. But you know what happens when you do that? You also get a tax write-off. So I'm all about making sure that clients are saving for their future and taking advantage of tax write-off while they're doing so. The fourth letter in M.E.R.N.A stands for niche strategies. Niche strategies are strategies that pertain to particular industries. Let me give an example. Let's say that we are in the construction industry and maybe they have heavy equipment. We can get a major tax write-off by immediately writing off that heavy equipment. Or maybe you're in the real estate industry and you're going to be doing a cost seg study on your rental property. You got to be looking at industry-specific write-offs. They're out there, they're in the code, so we're going to go out there and we're going to grab them. It's like our low-hanging fruit that we want to pick off the fruit tree, get you a great write-off. So you got to look at your niche strategies based on your industry. And our last letter is A, right? Alternative strategies. This is where you now have gone through the cupboards. You looked for all the ingredients and you don't have any more. You've maximized your expenses. You've looked at your entity structuring. You got the retirement savings down. You looked at the niche strategies, and now you actually are going to go out and buy tax write-offs. That's right. Buy tax write-offs. That's what the wealthy do. They go out and they invest in real estate. Why? They're buying tax write-offs. They invest in certain areas. Why do they do that? Because they're going to get tax credits. So we're going to look at alternative types of investments to lower your tax bill. But we got to do things in the proper sequence. Maximize our expenses, entity structuring, retirement planning, niche strategies, and alternative investments. And when you do that, you will have a lower tax bill and maybe even get your taxes down to zero tax liability. Uncle Sam is not going to be keeping your cash. You're going to keep your cash in your own pocket. And guess what? You now know better. And when you know better, you got to do better. And that means you need to like, comment, and subscribe so I can continue to educate you on all things tax.